Welcome back to the channel. Actually have my new webcam here today. Trying it out for the first time. We'll see how it goes. Uh, so wanted to really discuss two things today. The first is a question that came in on my Seeking Alpha monthly essay. And the second is a continuation of the previous video, which discussed the differences between Ray Dalio and Warren Buffett, two investors who I've learned a lot from. I'm very much indebted to both. So let's start off with the question on the Seeking Alpha essay. For those of you who don't know, every month I track the results of the Maneos compounding machine on Seeking Alpha, and I write an essay there, and I kind of track my CAGR. I showcase my dividend income, option premium, so on and so forth. And so let me just show you, like, here. This is actually the quotation, or excuse me, the question came in from a February of 21 essay. So it's from a little ways back. And here's the essay. And then here you'll see at the end, kind of tracking, like at that point, February, I had 592,000 in. The value was 917. For those of you who follow, I'm at 1.2 million now. My CAGR then was 18.31, so on and so forth. But let's get to it. Basically, he says, at Pietros Maneos, in which scenarios do you see your option strategies to stop working? And he quotes from my essay. I'll just read the end of it, where I say, so for me, the diversification into steady, stable assets that ensures my portfolio is more and more anti-fragile each month. It's a reference to Nassim Nicholas Taleb. It still performs at an amazingly high level. Again, my option strategy is quite risky and could be shut down at any moment due to market fluctuations, but the reward is extraordinarily high. So there you go. So what I'm referencing here is I run a modified version of what some people call the wheel strategy. I call it the ping pong strategy. And what that really means is I sell a series of puts and I collect a premium. Now, what I do with that premium is I buy what I talk about stable, secure assets. So I buy like Maneosians, super Maneosians. I might buy vanilla index funds. I might go through a bunch of different value screens and look to buy something like, let's say, like Allstate or Unum right now, whose dividend yield is higher than its price to earnings, which is a super Maneosian. Sber Bank, a Russian bank, is also super Maneosian right now, I believe, as well. So I look to buy these kind of undervalued Buffett-esque type of stocks oftentimes with the premium. But the reason that the strategy can get shut down at any moment is when I sell the put, if there's a massive market crash in those 30 days, then I may not be able to turn around and sell the call, especially because I do this with leverage ETFs on some of my decisions. And so, for example, in the great panic of 2020, I was shut down for several months, meaning I didn't collect much premium, if any at all, until the market recovered. And to that point, at one point, I was collecting 9, 10, 11,000 a month. If you look at the most recent monthly premiums, they're 2,200, 2,400. Still not bad, right? I mean, to collect 2,000 or 2,400 a month for clicking a few buttons, not bad at all. But not the 10,000 at what it was, because a couple of the positions are kind of shut down. If you probably the best way to describe it, until they recover in order to sell the call. And again, I run about 100, 120,000 with this particular strategy. And yeah, it's been great. It's just another form of income. You know, you have my 24 units of real estate, dividends, option premium, just all looking for that passive portfolio. So yeah, let me know if you have any other questions, Mendo. Appreciate it. I generally don't reveal my positions for the most part here. I mean, I talk about overall strategy. But let's get into this here. This is, and I mentioned last video, this is Ray Dalio's most recent book. Just finished it. Principles for Dealing with the Changing World Order: Why Nations Succeed and Fail by Ray Dalio. This is one of the best books I've read all year, and maybe in the last few years. I would say that that Dalio is one of our great living thinkers. And notice I didn't say great living investors. Um, you could say that, of course, but I really think he's beyond just an investor, a guy who's going to tell you that AT&T is a better buy than Verizon, so on and so forth. He's just going to write sort of analysis of equities or what have you. Um, and it brings me to what I wanted to talk about, which is the difference between Ray Dalio and Warren Buffett. In this book, you could really see the influence of Graham Allison, who talks about, with a rising power is challenging an existing power, and then studying various periods throughout history and how that's played out. So you can see the influence definitely from Allison. And Dalio studied basically the rise and falls of economic empires over the last 500 or 600 years. He really focuses in on a couple. He focuses in on the Dutch Empire, the British Empire, the American Empire, and the rising Chinese Empire. And what's fascinating to me is he uses these various metrics looking back in time. A nation's, let's say, is the nation a reserve currency? What's the educational level, the level of debt? All these different metrics that he uses with supercomputers, basically, to analyze these things, and then he's able to showcase kind of where in those particular cycles we are. And so, for example, if you were a Spanish Habsburg and you were an aristocrat, an oligarch, a merchant, if you were one of the haves, you would have been well served to invest, if not all, a certain portion of your wealth into the growing Dutch Empire. Again, if you were a British aristocrat, if you were a Dutch merchant at the end of the Dutch Empire, when Britain was rising, you would have been well served to invest some of your wealth in the rising British Empire. Again, if you were a British aristocrat at the end of World War II, 1950, 1955, you would have been well served to sell some of your lands, maybe one or two of your country homes in the English countryside, and buy a basket of American equities and hold those from 1950 onwards. You would have done very well for yourself by doing that. And so the question is, if you're an American aristocrat, oligarch, merchant class, however you want to phrase it, meaning if you're of means, following the repetition of history, you're likely to be well served by investing a certain portion of your wealth in the rising Chinese Empire. Now, you'll see when you talk about this, and this has happened to Dalio. For example, Mitt Romney has attacked him for not being, pro-American enough, if you want to use that term, not criticizing China for its human rights abuses. But if you're a pragmatist and an investor first and foremost, not a nationalist, then you have to look at what is the best and highest use of capital. And just again, judging from the metrics, the analysis that he does here, he really shows that America right now is the number one power, but in a gradual decline, in a way that the British Empire was in a gradual decline before it was supplanted by the American Empire, in a way that the Dutch Empire was in decline before being supplanted by the British. So it's a brilliant book, and so I just finished it today, actually. But it's in stark direct contrast with Warren Buffett's "Never Bet Against America," and I would have to really kind of side with Dalio here than Buffett, even though my own personal investing, I kind of side more with Buffett, looking at value investing as opposed to Dalio's global macro. In that, when you study history, all things come to an end. So when you say never bet against America, I mean, I guess one could have said that again about Athens if you'd lived at the time of Pericles. One could have said that about Rome, never bet against Rome at the time of Caesar Augustus. And then we get into Dalio's book, and we have, the Dutch, the British, the American. meaning there's ebbs and flows of power. Look at even within these sort of European banking dynasties, the Rothschilds, the Warburgs. Sure, the Rothschilds are still there to a certain extent, but not to the extent where they kind of were the banking dynasty of Europe. Look at the Italian Renaissance. You had banking families like the Medicis, the Borgias, that have kind of that faded throughout the generations. And it's the same with nation states, same with empire. So, I don't know if it's going to be 2050, and I don't know if it would be a war necessarily, but at some point, America will pass the torch to another power, just like England. England still exists. It still is able to defend its borders. It's still a stable country. It didn't fade away into nothingness, but again, it's not the power that it was, before the American empire supplanted it. With that said, I just want to play a little bit here of Warren Buffett, just kind of talking about, which would be very much in contrast to Ray Dalio, who would argue that if you're looking out for your own interest, if you're looking out for the best use of your capital, you might want to invest in China.
You might say that our underlying premise, and I think it's a pretty sound underlying premise, is that this country will do very well, and in particularly it will do well for business. Business has done very well. The Dow went from 66 to 10,000 plus in the 100 years of the 20th century, and we had 2 world wars and nuclear bombs and flu epidemics, and you name it, Cold War. There's always problems in the future. There are always opportunities in the future, and in this country, the opportunities have won out over the problems over time. I envy the baby that's being born today in the United States. I mean, I think on a probability basis, that's the luckiest individual that's ever been born, and I think that they will do very well in life in all kinds of ways on a probability basis, better than existed when I was born.
In your letter this year, you really took aim at some of the politicians who have been going around saying that things aren't going well in this country. You said that things are strong here. Is that a shot at thinking we don't need to make America great again?
Well, America's never been greater. I mean, you can look at where we stand. I mean, it will be greater in the future, but America's never been greater. I mean, this is the best time to be alive in the history of the world. I mean, in terms of medicine, transportation, entertainment, you name it, or just in terms of aggregate wealth. Now, the distribution has gotten more and more skewed in recent years, and it should be skewed to quite a degree. But I would say the skewing has been excessive. But as I mentioned in the letter, I live in a upper middle class neighborhood. I mean, the median income might be $100,000 a year or something like that, and every person in that neighborhood lives better than John D. Rockefeller Sr. lived at the time I was born. In one man's lifetime, an upper middle class neighborhood has evolved to a way of life that's better than the richest man then in what was the best country in the world in 1930 was able to achieve. He had power and prestige.
So I believe he said there America has never been greater, and that again would contrast with Ray Dalio here. Based on his metrics, he analyzes different countries. He puts all the information into a supercomputer based on these metrics, and then the computer essentially generates a report based on these things that throughout history have held up on various empires. So he has it here, and this is as of August 2021, so it's fairly recent. This is our computer-generated reading for the United States as of August 2021. Based on the latest readings of key indicators, the United States appears to be a strong power, number one among major countries today, in gradual decline. As shown in the table, the key strengths of the United States that put it in this position are its strong capital markets and financial center, its innovation technology, its high level of education, its strong military, its reserve currency status, and its high economic output. Its weaknesses are its unfavorable economic financial position and its large domestic conflicts. The 8 major measures of power are very strong today, but are in aggregate trending downward. In particular, the United States' relative position in education, its importance to global trade, and its relative military strength are declining. So again, that contrast, I'm not sure when this is filmed, with Buffett, with his view, never bet against America, and that America has never been greater, so on and so forth. And then I'll just read what Dalio's computer model says about China as of the same date. Based on the latest readings of key indicators, China appears to be a strong power, number 2 among major countries today, in rapid ascent. So again, you have the US in a gradual decline and the Chinese in rapid ascent. As shown in the table, the key strengths of China that put it in this position are its strong economic and financial position, its infrastructure and investment, its importance to global trade, its high economic output, its people's self-sufficiency and strong work ethic, its high level of education, and its strong military. The 8 major measures of power are somewhat strong today and are, in aggregate, trending sharply upward. In particular, China's importance to global trade, its innovation and technology, and its importance as a financial center are increasing. So there it is. So it's interesting, what your thoughts are on this and how you see this and how it affects your individual investing. Personally, I want to say maybe my $1.2 million. I have maybe 100,000 of that, so 1/12 in China, in Chinese equities. Again, from studying this, and I had done this before, but it just kind of ratifies that decision that, again, if you were a Dutch trader at the end of the Dutch Empire or as it began to decline, investing in Britain would have been good for you. If you were an English aristocrat, investing in America would have been good for you. And I think that over time, if you're an American capitalist, investing in China will be good for you. And again, you'll get criticized from the right, so you'll get criticized by like the Laura Ingrams, Sean Hannity's of the world, sort of a populist right nationalist. And then maybe you'll get criticized by the left for doing that because of China's maybe human rights abuses or its sense of autocratic government, what have you. But yeah, it's just a fascinating, and it's going to be the defining issue of our time, which is the conflict and the rise of China and how that plays out. I will say that, and Dalio says this also, if there's presently a hot war, the U.S. At present time is a much stronger power militarily right now. The gap is closing day by day, year by year. So if there is a hot war near the U.S., you almost want it to happen sooner than later. I guess the best comparison to that would be, would you want to fight a 13 or 14-year-old Mike Tyson, or would you want to fight a 21-year-old Mike Tyson? Pretty obvious. Not even saying at 13, I think he was knocking out adults in fist fights as a 12 and 13-year-old. But I'm just saying that at 21, he was pretty much invincible, and so on and so forth. So I think if there were a hot war and the U.S. won that hot war, it would set China far enough back where it'd be difficult for them to recover and then become that leading world power. So all of that for naught. All these indicators, if there's a hot war in the U.S., attacks China's infrastructure, manufacturing base, so on and so forth. But anyway, so that's pretty much it. Just wanted to go over those 2 points today. Hope you enjoyed it, and your thoughts on this U.S. China, this sort of conflicting view between two great investors, Warren Buffett and Ray Dalio. Take care, guys. Ciao.